Good morning, this is the latest market news. I am Uliana. Asian stock markets are exhibiting a mixed trend on Friday, tracking the lackluster cues overnight from Wall Street and lower commodity prices. Investors are trading cautiously following the recent currency-based volatility. Meanwhile, China's central bank on Friday increased the yuan's reference rate against the US dollar for the first time since the yuan's devaluation on Tuesday, halting the Chinese currency's three-day slide. The People's Bank of China said in the press conference on Thursday that there is no basis for the yuan depreciation to persist. The Japanese market is marginally lower as the lackluster cues from Wall Street and lower commodity prices dampened investor sentiment. In late morning trades, the benchmark Nikkei 225 index is losing 0.26%. In the currency market, the Australian dollar is flat amid easing worries about China's currency devaluations and falling commodity prices. In early trades Friday, the local unit was trading at 0.7361 US dollars, down slightly from Thursday's close of 0.7362 US dollars. US crude oil plunged to end at a more than 6-year low on Thursday as concerns over China eased and the dollar trended higher after some upbeat economic data from the US. Crude oil futures for September delivery, the most actively traded contract, plummeted 1.07 US dollars or 2.5% to settle at 42.23 US dollars a barrel on the New York Mercantile Exchange Thursday. This is the lowest closing for crude oil since March 2009. Eurozone flash GDP 9 GMT. The Eurozone economy is expected to have grown by 0.4% in the second quarter, which would amount to a year-over-year growth of 1.3%. That's mediocre, but it's better than nothing. And given the global weakness during the first half of the year, it's not a bad result. First quarter growth was also 0.4%. The weaker euro, cheaper crude oil, improving credit market and Greece's limited effect on the overall sentiment, largely due to the lack of contagion despite approaching elections in Spain and Portugal, are the reasons behind the moderate recovery. Growth remains unevenly distributed within the euro area, and without a pickup in investment, the growth rates will remain low. It was the latest market news provided by ICO FX. Goodbye.